To our event tonight, which is being hosted by the National Black MBA Association. I'm so happy to welcome you to our Making Black Angels conversation today. That's with Melanie Seymour. My name is Latoya Niles, and I'll be your host today as we really dig deeper into this conversation and topic. Right now, I work with the National Black MBA Association as a director for economic development and entrepreneurship. That is the passion, but the day job is in affordable housing and asset management. So definitely very much interested in hearing about your interests and how you are looking to actually invest and diversify your portfolio. And Melanie's here to actually help walk you through that and what it would look like. Melanie is the Director of Capital Access with the Institute for Entrepreneurial Leadership. She's spent the majority of her career in corporate finance roles across multiple industries: telecommunications, media, energy, and ed tech. Throughout her career, she has developed expertise in financial planning and analysis, business case development, risk management, financial systems implementation, and training, which is pretty much the reason why we were just like, all right, you're perfect to actually speak to us today. But most recently, she's actually been the finance director at Discovery, which is now Warner Brothers Discovery, with a global responsibility, and previously held positions with Black Entertainment Television, um, Co- Constellation Energy, as well as other industry leading organizations. So she can definitely speak to you guys about what the industry looks like overall and some of the things that you guys should consider. In her current role at the Institute for Entrepreneurial Leadership, she works with founders in providing resources for capital readiness, assists them with their financial projections and alignment of their numbers to their strategy, as well as their assumptions in their operations. Melanie also cultivates connections for expanding capital access across both established sources as well as investors that are interested in angel investing. So I hope you're as excited as I am to really dig into this topic and hear all that she has to offer and instruct us about both about the Institute for Entrepreneurial Leadership as well as what would it take for others to actually get into this space and so that we can really start creating more Black angels. Without further ado, because you definitely came here to hear from Melanie, I'm going to turn it over to her and she's going to walk you through that.
Thank you so much, Latoya, for that amazing introduction. Hello, everybody, and welcome to the presentation, Entering New Markets, the Making of Black Angels. It is such a pleasure to be here with you today for a discussion about this very important topic. Before I jump in, I want to personalize a little bit more beyond the bio. If it wasn't clear, I'm a career changer, and I let that be known before I speak for very intentional reasons, because I am where a lot of you are sitting now. I worked in corporate finance for several years, as was mentioned. But one thing that wasn't mentioned was that, and I don't have in my official bio, is why I got involved with this work. There were several reasons, but one thing that I want to be clear on is how infuriated I was when I started volunteering at the Institute for Entrepreneurial Leadership. And our co founder and CEO, Jill Johnson, started talking to me about angel investing. And I didn't know anything about what an accredited angel investor was. And I was really bothered by the fact that in all of my time in the four industries that were mentioned in my official bio, nobody had mentioned this to me. Nobody had invited me to the table. I didn't have the knowledge, I didn't have the relationships to know what I didn't know. And so now that passion has grown over the last over a half a year in these new shoes that I fill, and I'm trying to spread the word. I want more people to get involved in angel investing, and that's tied directly to one of the reasons why I changed my career. I wanted to make an impact specifically with closing the Black racial wealth gap. So let's get into it. It's just such a pleasure to be here to talk to you all about this topic. IPEL, which is short for the Institute for Entrepreneurial Leadership, is a nonprofit organization that our co-founder and CEO founded with her father back in 2002. With a big vision of having inclusive entrepreneurial ecosystems, our mission is to, it's kind of long, eradicate the systemic barriers that prevent people of color from being able to access the knowledge, networks, and capital required for entrepreneurial success and wealth creation. So, with that said, our three programmatic areas are relationship capital connections, investor inclusion, and community building small business initiatives. Today, we're going to be focusing on angel investor inclusion and why getting involved matters. Before we dive in, I want to thank JP Morgan Chase for their generous funding that supports this work. They believe in IPEL early on and have been a great partner in helping us advance our Making of Black Angels work to drive investor inclusion. So let's start with the question that I'm sure is on many of your minds, especially in a market such as the one we're in now. But at any point in your life of investing, you start with the question, why become an angel investor? Well, there's so many reasons, but we're going to touch on a few today that impact the broader issues of access to capital for historically excluded populations. So in late 2018, Morgan Stanley released a study. It was called the $1 Trillion Blind Spot. In that study, it showed that trillions of dollars are left on the table by firms who won't invest in women and minority founders. Think of that. Just let that sink in. Trillions of dollars because of this lack of investment. What's the problem? Many investors simply don't acknowledge the access to capital problem. The study revealed that while the majority of investors perceive the funding landscape as balanced, their actual investments, in multicultural and women-owned businesses are highly skewed. Another challenge that investors avoid backing minority-led ventures that support products or target customers that they simply don't understand. As an example, natural hair care. I read something about a Black woman founder who was pitching about something that infuses moisture in the hair and is very specific to Black women's hair, but she's pitching to a room of white men. So diversification is so important. And how will investors really understand if they cannot relate to the product? Lastly, investors believe that multicultural investments perform below market averages. In other words, they're riskier, even though they succeed at the same level as non-minority businesses, given similar access to capital. That is the key, given similar access to capital. So during our angel investor training at IPEL, we discussed the critical role that relationship-based capital plays within the capital landscape. We believe that each demographic has a unique relationship with money, investment profile, and wealth mindset, which must be addressed with cultural sensitivity and competency. So our objective at IPEL is to demonstrate how intentionality can be a game changer when it comes to access to capital within historically excluded populations. So let's examine the sources of capital and why there are significant challenges. If you take a look over here, starting at the far side, personal savings and credit accounts for $185 billion, the largest bucket on the slide. We talk a lot about banks, but notice where banks fall in this range of funding sources. Next come friends and family, then venture capital, then angel investors, then banks, then crowdfunding. When you consider how most businesses are funded, the importance of personal wealth becomes abundantly clear. If you don't have personal wealth, you won't have the resources to start or grow a business. If people in your inner circle or in your community don't have wealth, you don't have the friends and family who are able to put that money in. Right there, you've eliminated the first two sources of capital on this slide. If you don't have a strong financial profile, banks generally can't help you. Historically, the angel investor community has been very closed and not accessible to people who are not a part of the club. Crowdfunding is relatively small, and a successful raise is still largely dependent on your network. This is a reoccurring theme. Your network, relationships, incredibly important. These are the reasons that personal wealth and the impact of the lack of personal wealth is so striking. Now, let's talk about another major factor. It's the relationships. Now, this is a graphic depicting what's known as the PayPal mafia. Going back to where I started about, my personal experience in this space, when I was shifting and volunteering with IPEL, when I saw this PayPal mafia, this is really what struck me. It really blew my mind. And I noted it down and I looked it online. So if you're really interested, just take a look. There's several videos. You can look on YouTube and check out a 20, 25-minute video at most. So when you look at this slide, what becomes evident? Well, there are a few things that are evident. One, they are all people who came out of the PayPal circle. And two, they all look pretty much the same. So looking at this group, these are people that all got very, very, very wealthy from PayPal. But what did they do? They turned around and they started other companies and became venture capitalists. So let's just pause and look at some of the logos on the page. Within the circle, you have this PayPal mafia, as they call it. Some of these other companies that we know very well they got their genesis from the wealth generated from PayPal. That includes Yelp, that includes LinkedIn, YouTube, Kiva, Tesla is another one. So again, PayPal mafia. So they invested in PayPal and then went on with their own ventures, and then others invested in them, and then so the process continues. This is why we are trying to share information about angel investing. Again, common theme here, relationships. These are people that know each other. And if you look at it, it's a very homogenous group. You don't see women on this page. You generally don't see many people of color on this page. There are no Black people on this page. Again, I was infuriated. So when you look at the wealth, and it has a further impact when you look at only not what they founded, but the other companies in which they invested. So we see how these guys having personal wealth through the PayPal experience provided the resources to start the other companies and the resources to invest further. So now it's no surprise that many of the companies that they founded continue to have people that look like them who then become wealthy through connections and capital. And then they're investing in companies led by founders who primarily look like them, and the cycle continues. All of this is based on relationships and being in that relationship circle, this PayPal mafia in this instance. As we move forward towards closing the gender wealth gap, we need to acknowledge the gender disparity in investing and investment behavior. According to a 2018 Merrill Lynch study, women say that they're much less confident in their ability to manage investments than men. Just over half of women, 52%, told the researchers that they have investing confidence, while over 2/3 of men, 68%, felt strongly about their investment abilities. So let's talk about what the opportunity is. As you are sitting here listening, this might seem so daunting. To change the course of history, basically, and overcome centuries of systemic barriers that have kept historically excluded populations from owning property and building wealth, it seems insurmountable. Many of us have been talking the same talk and having these same conversations for years and years and years. We believe that we actually have a strategy and believe that collectively we have an amazing opportunity to open more doors for access to capital. The work that we're doing through this Black Angels movement is to get more Black people and allies involved in capital access channels that we can personally control. And that's why you see here highlighted the friends and family, angel investors, and crowdfunding. These are forms of capital based on people, individuals, and of course, personal relationships. I will say it again. Our goal is to have the participants in our training really think about where you can play a role in the investor ecosystem and thus be part of the solution to closing the access to capital gap for historically excluded founders, entrepreneurs, and small business owners. Let's take a look at how this has played out for women. So, a little over 15 years ago, women from Wall Street, they started coming together to figure out how to pull resources to invest in women-led companies. One of the groups that was early in this was Golden Seeds, which invests in companies that have at least one woman in the C-suite with meaningful equity in the company. When you look at the history over this period of time from 2004 through 2018, and you see the growth, you see the number of angel-backed companies that are women have increased, starting with 1,500 in 2004, and going up in a matter of about just under 15 years to almost 13,000. So let's go to the next slide. And you can see that substantial growth in the number of angels has been women over that same period of time. 9 times growth, 9x growth. When you look at these together and do the overlay, you see that there is a meaningful correlation. In 2018, angel investors invested $23 billion in 66,000 companies. Again, we see the correlation between the percentage of women, angel investors, and the percentage of angel-backed companies led by women. Then look at these numbers for minority angels and the number of companies that are angel-backed led by minority founders. Understanding that the correlation is what we looked at and said, we understand, like, wow, there's a model here. We don't need to invent the wheel. There are certainly differences in focusing on the challenges that Black entrepreneurs have faced and women. And to be clear, the women who have primarily participated in and benefited from the uptick in angel activity are white women. We still haven't seen nearly enough women of color being a part of that. But what we do understand is that there is a model and that there is a path forward toward inclusion. Our model through the Making of Black Angels is to make that happen. We need more Black angel investors and in general, more Black people involved in the investor ecosystem, whether it's investing a lot or a little, from friends and family money to crowdfunding, it all counts. What does it take to be an angel investor as per the Securities and Exchange Commission definition, the SEC definition? As you see here, the definition of an accredited angel investor is having $1 million in net worth, excluding your primary residence, $200,000 of annual income for a single person, or $300,000 of annual income if you're married. We know that even if you meet this criteria, financial capacity still might be an issue. Maybe you're caring for family members, or you have kids in college, or maybe you're still paying graduate student loans. What we want you to do is think about how you can participate within this capital ecosystem in one way or another, and work your way gradually toward becoming an angel investor if you feel like that's what's right for you. The reason that we're focusing on angel investing is because it puts you in rooms with people who have wealth, and you want to become part of these wealth networks and these influencer circles. The education that you get through the angel investing experience is one that provides a foundation for you being able to advise entrepreneurs who are in your network. It also provides a foundation for you to be able to be smart friends and family money for your business owner family members. With more of us gaining this experience, we're increasing the financial literacy level within our community to the 2.0 level. So, what's the solution? Well, it's all about getting involved. Investing is fun, but it's more fun as a team sport, and it has greater impact when we do it together. We believe that angel investing can create a pathway to wealth building. First, as an asset class, as an investor, and by helping the entrepreneurs that we fund get on a path to creating strong companies that have an opportunity for an exit. Through an exit, they build wealth, we build wealth, and we create a larger pool of investors in other companies. That is how the flywheel is set in motion. So we invite you to join the community of angels. Become engaged through training. Take action if you believe this is the right space for you. Our program at IPEL begins with training and engagement. During our introduction to angel investing course, we go much more in depth, including, a step-by-step understanding of the deal process. Our angels in training also have access to experiential learning and community. That is key, community. We believe in learning while doing. And we host entrepreneur showcases throughout the year. Our next one is in July. Participants gain valuable exposure to investment opportunities and interactions with existing angel investors through the deal process. So let's be clear. Institute for Entrepreneurial Leadership and the Making of Black Angels within our organization. We are not an angel fund. We are not an angel group. We are a nonprofit organization. We do, however, help program participants find the right angel community if you choose to go further. So while you can certainly go out and find deals on your own and start writing checks if you feel that you can do that, we actually suggest exploring options to invest where the stakes are low or you have the benefit of a team effort. This is a high risk space. Early stage investing is something you really want to enter in a way where you feel comfortable. And again, community can be very helpful and can make investing fun, make the process more fun. So let's start with angel groups. There are many, many angel groups out there. Groups that invest in women like Angel Seeds, which is what I mentioned earlier with the chart that we showed. There's Astia, there's Pipeline Angels. There are angel groups that are associated with a particular alumni group, like Stanford Angels or Wolverine Angels. Then there are angel groups associated with a particular geography. For example, New York Angels, appropriate for this group. There's Social Venture Circle. That's a group that's focused on impact investing. That may be your interest. There are groups that function in a convener capacity to bring investors together deal by deal. One example of that would be Black Angels Miami, which is mostly investors in Miami, and the Syndicate with investors nationally. As I said before, there are a lot of angel groups out there, each with its own unique personality and requirements. So we encourage our angels in training who have gone through our initial education and awareness and our experiential training through our entrepreneur workshops, we encourage them to look at these websites, understand the investment criteria, which you will learn more about in our Intro to Angel Investing training within IPEL. And then meet and talk with people from the group that you have interest in. Attend a meeting, see how you feel. There are people who are part of several groups for different reasons. Finding the right group or groups is all about fit. So let's talk for a minute about another potential opportunity for people who don't want to do all of the due diligence that you may do in an angel group. You may not have the time, but you are still, playing in the accredited angel investor space that I defined earlier. So another way to invest in that space is through a fund that's professionally managed. You would participate as a limited partner, or LP for short. This means essentially that you invest money, but you don't play a role in the day-to-day operations of the fund, and you are not directly selecting the investments. You are investing in the management team that will be making the investment decisions. Typically, you want to understand their investment track record and make sure you're in alignment with their investment criteria. Funds have different profiles, so do your homework. The funds that we show here are smaller and have a diversity focus. Portfolio, Black and Latino Angel Investment Fund of New Jersey, Rare Breed, Urban Capital Network, Golden Seeds, Collab, Still Sky Ventures. There's several that you can research. The funds that we show, again, have the diversity focus, but if you want to invest in early stage private companies, but not do all the work required to make individual investments yourself, becoming an LP could be right for you. And for those of you who are thinking that you may need to start at the $100 level versus the thousands of dollars level, I'm sure that's common. Let's talk about crowdfunding. Very important in this conversation. Even in this space, there are so many different crowdfunding platforms. The concept of sourcing capital from many people within a community has been around for a long time. However, crowdfunding platforms that we see today were made possible as part of the Jobs Act of 2012. So we're just talking about a decade of this being something that you have access to. It enabled people who do not meet the accredited investor requirements to invest in private companies. I'm going to repeat that again because that is critical, super important to keep in mind. If you thought earlier when we talked about the SEC criteria, the $1 million of net worth, excluding your primary residence, that's a big deal for Black folks. Let's be real. Also, in terms of income, $200K for single, $300K for married people. I'm not going to take it down the path of the bias there. That's kind of problematic from a lot of our perspective. However, putting that to the side, thinking about how you can get involved, even if you don't meet the criteria, or if you meet the criteria, but your comfort level isn't there to invest at the angel level. And again, you want to get in at the $100 level or even lower. This Jobs Act of 2012 enables people who don't meet the criteria or want to enter and they're a little more risk averse or just want to kind of dip their toe in initially, it allows them to invest in private companies. Regulation crowdfunding, RegCF for short, enables eligible companies to offer or sell securities through crowdfunding. Game changer. So transactions must take place online through an SEC registered intermediary, either a broker dealer or a funding portal. Maximum aggregate raise of $5 million through crowdfunding offerings in a 12-month period. This is one of the criteria. There's also a limit on the amount of individual non-accredited investors can invest across crowdfunding offerings within a 12-month period. So there are regulations within this space. There's also disclosure requirements to make sure that people have the information that they need to make an informed decision. In addition to equity crowdfunding, there are debt platforms as well as rewards-based platforms. They each have a different feel or personality. So I encourage you to go to the different sites and look through deals. This is a really great way to dip your toe into the water. On many of these platforms, you can invest for as little as $25. You might even do $100 or $500 if it's a deal you really like. While you might think that this amount of money is too small to move the needle, keep in mind that for entrepreneurs, for founders, and small business owners who are raising money through these platforms, every dollar counts. Crowdfunding is built on getting a lot of people to invest a little, so your dollars matter. Advocates often talk about crowdfunding as a way of democratizing access to capital. It's not only democratizing access to capital for the companies that need to raise money, it's also giving people who otherwise have been shut out of the investor ecosystem, like myself and others, some of us on this call, an opportunity to invest in private companies and be included. One example of a business within the Institute for Entrepreneurial Leadership Network that utilized crowdfunding was Evolve Therapy, which is located in Newark, New Jersey, which is actually where IPEL is headquartered as well. This business owner needed a small loan for his occupational therapy business, which opened during the pandemic. Via a crowdfunding platform called Kiva, which is part of that PayPal mafia circle on the slide we shared earlier, the business owner was able to secure $2,000 to improve the company visibility and online marketing after a delayed opening due to the pandemic. As we have discussed, there are many ways to be involved in the investor ecosystem as an individual. Maybe some of you have already given a loan or put money into a friend's or family member's business, but haven't thought of yourself as an investor. Well, you are, so wear it proudly. If you're interested in learning more, you can register for our Introduction to Angel Investing course, which is a part of our Making of Black Angels program. So this training is delivered virtually via Zoom over 3 sequential Wednesdays. The next series begins in less than a month on Wednesday, June 13th from 6:30 to 8 o'clock p.m. Eastern. Our next Entrepreneur Showcase will take place on Wednesday, July 27th from 7:30 to 9:15 p.m. Eastern. Now, just let me pause there and just kind of explain how this works. If you notice, the last of the 3 sessions in July 27th, that session is shorter than the prior 2. So you have the 1.5 hour sessions on July 13th and July 20th. Then you have just a 45-minute session on the 3rd Wednesday. After that, there's a 15-minute break. And if you look at item number 2 on the slide, you will see that the Entrepreneur Showcase starts 15 minutes later. 7:30 p.m. to 9:15 p.m. So just stepping you through it, you start off with an intro training on day one. You learn about deal screening and developing your investor criteria. What is your investment thesis? We walk you through due diligence. How do you analyze deals? Thinking of the team, the market, what's the total addressable market? What is the problem the person's trying to solve? You have to do your due diligence. And then finally, we talk about different ways to get involved. And the idea is while you have that momentum, while you're in that third session, that shortened session to 45 minutes, we're going to lead you right into an entrepreneur showcase. This is where the experiential training comes in. So we go from awareness, which is what I would call tonight, to education, which is the 3 sessions that I just explained. And then in the same night of your third session, you're going to be sitting, if you're interested, if you sign up, you can sit as what we call an angel in training. The idea here is to couple new angel investors in training with seasoned angel investors. So within our IPEL network, we have folks who have been at this for 10, 20 years, and they know the questions to ask. They know the process. So the idea is we don't want it to just be academic. We want it to be hands-on, where you're actually able to participate. You're able to understand the questions that people are asking and then contribute as well and ask your own questions. After that entrepreneur showcase, another part of the experiential training is taking the next step, which would be a deep dive session. So let's say you are, at an entrepreneur showcase and you have 3 businesses and one of them you're really interested in. Let's say you have developed your investment thesis and your criteria includes you have an interest in fintech, for example. And let's say one of the founders is a fintech business. You want to learn more. We give you the opportunity for a 1-hour deep dive session, not on this slide, but I think it's important to highlight this point, is that, again, you have a second opportunity for that experiential training of not just doing the Q&A initially, but following up with investors and seasoned investors in some cases who have an actual interest in a real entrepreneur who is fundraising. I also am aware that there are entrepreneurs on this call within the New York Metro chapter of the National Black MBA Association. Reach out to us. We are not just about the side of awareness and education of the investor. At the end of the day, the department that I am leading in IPEL, that the work that we are doing in IPEL as a team is about access to capital. So that's not just cultivating the access from the investor perspective. It's also coaching the small business owner. We have various programs, hackathons. We work very closely. We're very high touch, working closely to get you ready to pitch in the Entrepreneur Showcase, which is item number 2 on this slide. So last but not least, I want to touch back on the Small Business Needs Us Showcase events. We're not just focused on angel investing, right? So access to capital is a broad challenge. It goes way beyond the angel space, the growth scale exit trajectory, because ultimately angels are thinking, how am I going to make money from this? What does your exit look like? If you're an entrepreneur on this call, think about that. If you're pursuing angel investment, angel investors are going to know, how are you going to make this person money? In outsized returns relative to the stock market, as an example. But we also have those Main Street businesses or those smaller businesses that aren't trying to exit. They can be like the occupational therapy company that I mentioned earlier, where there was a $2,000 loan on the Kiva platform. So we also have showcases such as that, where there's smaller dollars needed, but it's still important. Access to capital is critical. It could be $2,000. It could be, $1.2 million. Whatever the case may be, we are here to support our small business owners. If you want more information on the intro course, both in terms of the breakout that I explained with the training that is in a webinar format, as well as the Entrepreneur Showcase, you can scan the QR code to the right of this slide. And then also you can access our training, if these times don't work for you, you can go onto the Teachable platform. You can also scan this QR code to register for that training. You have an option of sequential training, so you can go through step by step exactly how it's produced and shared in the 3 sessions that I mentioned. Or let's say you take the training and you're like, you know what, I want to hear that panel again, or I want to learn about this element of the due diligence process. That part of the training is a la carte. You can just say, you know, I want to learn more about what was shared about crowdfunding as an example. So we're really excited about this teachable online course and really encourage you to take advantage of it. Again, this work that we're doing is funded by JP Morgan Chase, and our goal is to get as many angels in training as possible. So with that said, that is the presentation. I would be happy to answer any questions you may have about our programming as well as angel investing, and I thank you for your time.
Well, thank you so much for that amazing presentation. It was so helpful to not only get like a better understanding of exactly why this is so important for us to be in these spaces, but also exactly what it would take for us to start actually investing in these different companies as individuals, or if we're not at that stage yet, with an organization, in order to mitigate some of that risk. Before I start taking questions from the audience, I really wanted to pick your brain just a little bit. And I'm sure many people who are on this call and they're thinking about like their themselves potentially as individual investors and not necessarily just as group investors. It's like, where do you start? You know, what are the key industries right now that you've seen an increase maybe even in angel investors? If you can give us some insights there around where people should even start some of that research, what spaces they should be looking into, I think that would help start percolating some thoughts.
Absolutely. So I have to be honest, I pulled a couple of people who have a lot, like several years behind them in this space to kind of see the progress they've seen. I'm very transparent about my anger about not being aware of this until very recently. I was aware of angel investing, but wasn't aware of the on-ramps. That's the best way to put it, and the requirements to get involved. So with that said, you know, I've observed some things on my own, but some things that some of the more seasoned investors, one in particular, shared with me, is that especially for folks of color, they're looking for STEM. You know, also that the size, the total addressable market for those entrepreneurs on the line, they should really be clear about what their TAM is, the total addressable market. So the TAM for you know, things like batteries, electric batteries, is no longer in the billions, it's in the trillions. And I'm quoting this seasoned investor from Golden Seeds on that. So that would be one thing to think about. The STEM fields, biotech, even though, you know, there have been like in the traditional market, on the stock market, there have been some changes there, but that is one thing that was mentioned as well. And then also, just stepping outside of the trends, a lot of people, a lot of seasoned investors, you'll find want to invest in things they understand or they're compelled by. Or even if they don't fully understand it, they understand the problem. So the key is, you know, looking at something that you can understand the problem and there's a solution. And there's so many problems now. Another thing that was emphasized in these conversations I had was climate change and things that are associated with the environment, you know, including what I mentioned with the batteries, electric batteries, but other things as well. So those are the areas. We see other things as well. A lot of tech-enabled companies. So it might not be the traditional tech company, but also, you know, tech-enabled companies will be some things that folks invest in as well.
Got you. Thank you so much for that. And I think you hit on like a key point that I know I was curious about as you were going through your conversation. And that was like, what are some of the key questions I should be asking myself? You talked about tech, but that might not be, to your point just now, a lot of people's backgrounds.
Mhm.
So you might be able to invest capital, but also as like an entrepreneur working with a startup, hopefully you can utilize your own network, your own expertise in order to continue to help these organizations grow, both for the individual entrepreneur, but also for your own portfolio.
Mhm.
So it's really curious what other questions you should really start asking yourself outside of what industries do I feel as though I have like a good background in and know the space well. Are there any other questions?
Oh, there's so many, Latoya. I would say, in my personal opinion, is the first question to ask yourself is your entry point and how much involvement you want to have. So you made a really great point about how oftentimes angels are very involved. That's very common, where they'll offer that expertise. Maybe in the contractual negotiation, they part of the negotiation may be they want a board seat. They really want say, or they might be involved in like an advisory capacity, or they're just an ear. They're available and the entrepreneurs know it. But it's possible that you're super busy, and quite honestly you want to put your money in and you want to forget it, which is why in our training we're very clear about there's so many different pathways. So it's not prescriptive. It's really looking at your own life. Do you have the capacity to do the due diligence? Do you have the capacity, if you have the skill as well, to like dig into the numbers? Or maybe you are, you have expertise in IP or in law. So you dig into the patents, and that type of experience would be in an angel group, right? In the angel group, you will have that due diligence team, and you will get involved, and then you may, moving forward, get involved on the level that you mentioned, like in an advisory capacity, whether it's titled or not, right? But you may get involved in an angel fund where you may instead be a limited partner. You may do crowdfunding because you might work 80-hour weeks. That doesn't mean, and what I really want to emphasize is, just because you're super busy doesn't mean that you can't get involved. It's really up to you. It is really up to you. So the question I would ask myself is, what is my capacity and what is the level of involvement that I would like to have? Then once you decide on that, the next thing is figuring out, like, what is your investment thesis? Like, I know some people are like, I only invest in fintech companies, for example, or I will not. They have like will nots too. Like, I will not invest in even tech enabled consumer product companies. That's not my space, right? We've heard quite a few people say that. And it's nothing against the founder. Maybe they just don't understand the space. It doesn't excite them, so it's super personal. So again, I always go back to our training because it's really well thought out, in that there's homework, questions you ask yourself, like what is important to you and things of that nature. So I think that's really an individual thing, but those are the questions I would start with, like your capacity in terms of time. And I know a lot of people, like, it's super fun for them to get involved with the entrepreneur, as you mentioned, like coaching and advising. It's really exciting. So if you have that capacity, I think by all means, there are avenues for you to take advantage of.
Thank you so much for that. And I know I could just continue peppering you with questions, but I want to make sure to give our audience an opportunity to also put forth some of their questions. Just checking to see if we do have any questions out there from the audience. I believe you can put them in the chat. Thank you. So if we don't have any questions as of yet, more than happy to continue peppering you with mine. But remember, you can definitely use the chat. Anybody who's online, if you have any particular questions for Melanie, as you can see, she's a wealth of knowledge and expertise, and both from her previous background as well as where she is currently. So, as you were talking about, some of the key questions that you should ask yourself, I was also starting to think about, like, what questions am I asking the company? Like, I may want to be highly involved. I may want to, engage with the organization. But one, starting to think about, I might want to do that for like a month. And then afterwards, I'm just like, you know what, my schedule's a little bit tight now. I think we often hear about all of the overnight success stories of startups, and it's like,
Mhm.
okay, it's not I'm gonna come in, we're gonna work on this for like a month, and then thank you, I'm out. Not always. So I really want to get a better sense of what does that long-term commitment look like for both the investor as well as the entrepreneur, and like if you have any key questions that um, angels should be actually asking themselves as they evaluate what their portfolio could look like and what it potentially can sustain over a long period of time.
Yeah, so great question. I think that, again, hate to repeat myself, but like it's questions that you have to ask yourself as well. So this is a really high risk space. So we're not saying, hey, everybody, this is right for you. What we are saying is this is something we should all know about so that you have options, right? So you may decide you want to keep your money in bonds or like, like blue chip stocks or something after you're trained. But the point is get trained. Like have that choice, right? So then once you get trained and you know what's available to you, you may decide, okay, early stage investing is for me. Pre-revenue investing is not for me, right? A lot of the companies that we work with in our entrepreneur showcases, they're pre-revenue. They might not just be like an idea on a napkin, like they have traction because ideally that's what angels, not ideally, that is what angels are looking for. They're looking for traction, right? They're looking for that potential and a lot of information fleshed out. However, you will definitely have a range of early stage investments. You will have those folks who, they don't have any sales yet. And then you'll have other folks who have 3 years of historical financials, right? But maybe they're not profitable yet. So they're still, trying to gather that momentum. They still kind of need to get out of that dip where a lot of businesses fail. But at the end of the game, at the end of the day, it's high risk. So what level do you want to take the risk? Do you want to go in what's called a priced round or a non-priced round? A non-priced round is early on. These are things that you'll learn as you become more comfortable in the space about valuations and things of that nature. And it's super fascinating. Like it's just a whole world, Latoya. Like just the valuations, the process, but then all the different things. Like if folks are really interested in looking things up, like there are convertible notes, right? There's safes and like different ways that you can invest. So there are a ton of questions to ask yourself. I think that it's like any other decision in life. You have to figure out, how do I want to get involved and what money am I willing to put into this space? Am I risk averse? Or, do I want to take more risk because I want outsized returns and I'm okay with losing this money? We're very straightforward in saying a lot of these businesses are going to fail. So don't put forth money that you really need. You may decide that you want to invest, 1% of your assets, whereas others may want to invest 5% of their assets. It's very personal, but at the end of the day, you have to gain the awareness and the education to make an educated decision. What we will do is give you a ton of questions categorized in different ways in the due diligence process. And it will be categorized. What are things you ask about the team? How about governance? I didn't really touch on governance in this presentation, but that's super important, right? What is the board structure? Is there an advisory committee? How many seats on the board will folks have? Also, the structure of the funding, there's so many questions that can be asked, but I think that initially for me personally, again, I always reflect on from the perspective of somebody who always wanted to get involved but didn't know how to get involved. At this stage in my journey, I'm looking at what is right for me. And what amount of risk am I willing to take? What am I willing to lose? And what do I hope to gain? Right? And how do I want to contribute in the ecosystem? Do I want it to be purely financial? Or do I want to take some of my own gifts, talents, and knowledge and actually contribute in ways that are associated with the knowledge and the relationships? Do I want to be a connector? So you can get involved in ways that, far surpass the financial ones if you choose to, or you can write that check and keep it moving. So, yeah.
Thank you so much for that breakdown. And I'm definitely asking myself these questions as we speak right now. Um, I know that you definitely talked about how you'll go more in depth of like these different topics and like these different types of questions you need to ask yourself in the training. Could you just like further lay out what the three sessions will entail a little bit more? I believe we have somebody asking a little bit more about that.
Okay, and skimming through the text at the bottom as well.
Mhm.
Okay, so in terms of the 3 sessions, some of those terms we don't dig into this training. I would say that goes beyond the training because it's 3 sessions, and if you look at the actual time frame, it's 1.5 hours for 2 sessions, and the last is 45 minutes. So you're talking about less than 4 hours of training. So while we dig deep and we get into the details about all of the topics that I mentioned, we don't get into the topic of, for example, like capitalization tables, cap tables for short. We don't get into like dilution and things of that nature. I'd say that's the next step. We definitely have resources and contacts and relationships to direct you. So our goal again is the awareness and the initial training. Because I would say that, a lot of folks, myself included, if I go back just a year, we didn't know about the SEC criteria. So if you're thinking about like what this training is, it's that. It's what are the definitions? Who are the players? How do you like deal flow? How does that happen? How do deals come to you? And how do you like, some founders say that, the best gift they can give, or like an investor will say, one of the gifts that a founder can get is no, like an early no. Because just think about it, if you go through all these rounds of, presenting and pitching and do, deep dives and all due diligence just to get to a no, right? So we talk about like what precedes due diligence. Because in the deal flow, when you do the deal screening, it's actually kind to the founder because they're trying to raise money. This is time consuming. So we teach our participants about deal screening. Like let's say for example, like I'll use the example I gave earlier about how you're completely opposed to investing in a pre-revenue business. That's part of your deal screening. You shouldn't be involved with due diligence if you like very early on in the initial pitch, they're like, yeah, we have no sales right now. Like, you know what I mean? We're working on our IP, like we have patents pending, whatever the case may be, but we don't have any revenue. Okay, that's the time to say to yourself, unless you have some exceptions, but if you're absolute and you have made these rules for yourself, that's your time to make that decision in like the deal screening phase, right? Not way down the path of due diligence, days or weeks later. And so I don't recall all the terms that were on the bottom of the screen, but I saw dilution was one. I think it was something about like the terms and like, the contractual terms. I would say that's more like, if you call this like 2.0 of investing, I'd say that's like 3.0. Once you get into the more, the calculations of the cap tables and the governance and the boards and, the negotiations and the term sheets and things of that nature.
Thank you so much for that. We only have about a couple more minutes of our conversation, so just one more call to see if there were any like final burning questions.
I saw one earlier that was something about on-demand training. So I did want to repeat that as well, that we do have the Teachable platform training. So we can, we are ifl.teachable.com. I believe I actually will include that with my email to you so that it can be distributed to the group of attendees.
That would be amazing. And it's a perfect segue. So we really do thank you so much for all the knowledge that you shared, even within like what those last 2 minutes when you were just breaking it down. I was just like, can't really take notes right now, but I will be in the trainings.
Good.
So I think that you've shared so much knowledge, and we really do appreciate just making sure that this is more accessible to additional folks. And it definitely sounds as though that is your goal and that is ours. So more than happy to share that information with everybody here on the call, who was able to join us tonight, as well as anybody who definitely had showcase interest and maybe schedules just didn't align.
Oh, absolutely.
But I did also want to share that one of the key things for me as well that you had stated was that a lot of this is about relationships. And so making sure to continue to be involved with your organization, but also to be engaged with the National Black. There are multiple different opportunities to connect with not only members, but entrepreneurs and professionals. And you don't know exactly when you're going to actually meet individuals who are at different stages of their company. So to continue connecting and continue to attend sessions like these.
Absolutely. And can I just put a quick plug in? So if you don't mind, just like 30-second plug. Okay. So my pleasure to do this. And if there are members on the line who are involved, I used to be involved in employee resource groups at Discovery, which was my last corporate role, other organizations as well, energy company I worked for at Constellation Energy in Baltimore. And so our goal, Latoya, is really to get in front of these employee resource groups, talk to people who were frustrated like me or don't even know to be frustrated. They didn't even know this is accessible. And like, again, it's aggravating that this knowledge isn't shared with us, that things like the PayPal mafia exists. That's the extreme. But now that I've gotten involved, I've had conversations with some of my former colleagues. They're like, oh yeah, one of them is in London. Oh yeah, I just got involved in this angel thing. And I'm like, oh really? Like it's never been mentioned. And so can we, get in front of the ERGs? Can we get in front of the other organizations and just spread the word? And just that's how knowledge will spread. It's all about community. It's all about relationships. So reach out to me. I'm very accessible. My email is melanie@weareifel.org. That is WEAREIF like Frank, EL.org.
Wonderful. Thank you so much once again, Melanie. Truly a pleasure to have you, and we look forward to additional conversations. Plus, please make sure to invite us to the showcase.
Of course.
Yes. All right.
Thank you so much for having me. It's been a pleasure.
All right. Thanks, everybody. Well, thank you.